Hello, and welcome to Track Your Dividends. In this video, we will be analyzing Intel's stock, ticker symbol INTC. We will very briefly go over what the company does, then we will go and look into how this year has been for Intel. After that, we're going to look into their different business segments and how each segment, as well as Intel's overall revenue, has grown. We will also look into Intel's dividends and their competitors. Then, finally, we will attempt to assign the company's stock with a fair value in order to see if they are a good buy today. So, to begin, many of you already likely know what Intel is and does, so we'll keep this brief. Mainly, Intel manufactures and develops desktop, laptop, and server CPUs. They also, however, have other business segments, such as their own lineup of portable computers and SSDs. Recently, this year hasn't been very good for Intel, as the only thing consistent about their stock this year seems to be that it continues to crash every couple of months. Many of these crashes can be accounted to specific announcements or decisions that Intel has made which caused the crash. Namely, this crash back here in July came after Intel announced that they would need to delay the production of their 7nm processors all the way until 2022. What's so worrisome about this is, for many investors, is that Intel's main consumer CPU competitor, AMD, has already made the move to the 7nm processes. We will look more into this when we go into Intel's competitors. The next crash, in late October here, was likely caused by Intel's decision to sell their NAND memory business to SK Hynix. Unlike with Intel's 7nm delay, this crash, we believe, was an overreaction from the overall market, as Intel selling their NAND business could be good for them in the future, as they can then take that money from this deal and put it into speeding up their 7nm production, and hopefully reduce the need for delays. Some more bad news for Intel that happened this year, but wasn't substantial enough to cause any sort of crash in Intel's stock, was the news that Apple was moving away from using Intel CPUs in their MacBooks, and would be moving to use their own processors. This isn't the most substantial piece of news to note, however, it shows that even manufacturers of laptops are becoming increasingly dissatisfied with Intel's products, especially as AMD continues to innovate and lower their prices. Something similar can also be seen with the increasing number of laptops coming out with AMD CPUs. Moving on to looking at Intel's revenue. We can see, looking at this graph of their revenue from 2015 to 2019, that they have actually seen quite substantial growth in this time, growing 30% in revenue. Although most of this growth can be contributed to the growth they had in 2018, where they grew their revenue by almost $8 billion alone in that year, whereas in 2019 it only grew about $1 billion, which in comparison is not an extremely strong growth. However, it still seems fair to say that Intel will continue to grow its revenue with each year, even if not at the substantial rate that they did back in 2018. One last thing to note about how Intel's revenue may grow in future, before we move on to their specific segments, is when thinking about Intel's future revenue, you should take into account that different decisions that they've made this year. And while these decisions likely won't make an effect in this year's revenue, since they were made quite late into the year, they will definitely make noticeable effects in the years to come. Okay, now we will look into how Intel splits their business, and then look at the growth of each sector in order to determine how each segment is performing. So, to begin, looking at this pie chart of Intel's revenue, Intel splits their business into two main sectors. The first and largest is their PC-centric sector, which covers about 54% of their revenue as of September 26th this year. And the other sector is Intel's data-centric sector. This covers the other 46% of Intel's revenue. This sector can actually be split up further into subgroups. These groups are Intel's data-centric group, their non-volatile memory solutions group, programmable solutions group, their Internet of Things group, and their group called Mobileye, with their data-centric group accounting for the majority of the revenue that comes from this sector. Looking at the data-centric sector, Intel acquired Mobileye back in 2017, and since then they have seen substantial growth in the revenue brought from it. However, it is important to note that the 2017 revenue does not represent the full year, as Intel did acquire the company that year. With that in mind, however, it is still a substantial growth, as Intel bought Mobileye back in March of 2017, so only about 2 to 2.5 months are left out. Intel's Internet of Things group and their non-volatile memory solutions group have also seen quite a substantial growth in the past 5 years. Intel's data center group also saw very strong growth back in 2018, which may have been what accounted for that large spike in revenue we spoke about earlier. However, one worry there is with many of these groups' revenue growth is they are looking as though they are starting to stagnate and don't seem to be growing as much as they previously were. The most worrying group, however, is definitely Intel's Programmable Solutions Group, which saw a decline in revenue in 2019. And while it wasn't a substantial decline, it still doesn't boast well for their future revenue. However, it may still be too early to make any predictions on each group's revenue growth. We will just have to wait and see how each group did in 2020. If Intel was able to increase growth in each sector, or at least continue to grow at a steady rate, then the future may start to look brighter for Intel. Moving on to Intel's PC-centric sector now. In this sector, they only have one group, which is their client computing group. This group has seen a slow but steady growth in revenue year over year. This is all coming off of an 8% decline in revenue back in 2015 too. However, this sector is not safe from the issue plaguing Intel, which is a seeming stagnation in revenue growth. This sector is also the one where Intel is seeing the most competition with AMD. While Intel's recent numbers aren't the most reassuring, like with Intel's other sectors, as long as they can keep up a slow but steady growth, then Intel should be okay to continue competing with AMD strongly. Now, since we have brought them up so much already, let's take a look at how Intel compares to their biggest competition, specifically in the consumer market, AMD. We will mainly look at each company's growth and revenue over the past 5 years and compare them. So, to begin, looking at a chart of percent growth year over year for both Intel and AMD, it is clear that AMD has been growing at a substantially faster rate than Intel has, with 2017 and 2018 seeing an over 20% growth in overall revenue. However, if we put Intel's and AMD's actual revenue for each year on the same graph, the picture starts to look a little different, with Intel's revenue absolutely dwarfing AMD's by a significant amount. Just by looking at this, we can easily tell that Intel isn't doing such a bad job for themselves. Now, some may look at AMD's growth and think that they are still better than Intel despite their revenue because Intel's recent growth has looked shaky. However, it is also important to keep in mind that AMD continuing to grow at this rate is highly unlikely, and even if they did, it would take well over 10 years for them to catch up to Intel in terms of revenue. To put this difference in revenue truly into perspective, here is a graph of AMD's yearly revenue beside Intel's yearly research and development expenses. Looking at this, it's pretty clear to see that even though AMD recently has been growing a significant amount and has been releasing better and cheaper products to the consumer market, Intel still should not have too much to worry about in terms of being overtaken by AMD. Okay, so now we understand Intel's business and how they compare to their competition. We can now look at Intel's dividends. We actually included Intel in our top 5 dividends for November of 2020 list, so if you're interested in other dividend stocks, make sure to check that out. Intel pays out quarterly dividends at 33 cents and has been growing their dividends for about 6 years. This consecutive growth isn't very long, however, but they've been growing their dividends at a strong rate. Intel's payout ratio is 27%, and looking at this chart of their earnings per share beside their annual dividend payout, we can see that Intel looks to be on track to continue their strong growth each year, as they have plenty of space between their earnings per share and annual dividend payout. This basically means that they are making enough profit per share in order to pay out dividends without needing to stop or slow growth, or even lower the dividend. Overall, Intel's dividends are very strong and a great bonus to what already looks like a very strong stock. Alright, now that we understand Intel's business, their competition, and their dividends, we are ready to try and assign Intel stock with a fair value. As usual, we will first try to predict whether or not Intel stock is over or undervalued. Then we will give it what we think is a fair value using the discounted free cash flow method. So, to begin, we will compare Intel's and AMD's price to earnings and PEG ratios. PEG just means price to earnings growth. And just by looking at these two values, it seems pretty clear that either Intel is severely undervalued or AMD is severely overvalued. Although, in all likelihood, it is probably a combination of the both. Either way, this is good, because now, when we do our valuation, we should expect Intel to have a fair value higher than what their current stock value is. So now, using the discounted free cash flow method, we come out with a fair value for Intel stock of around $92. Looking at Intel's price charts, we can see that currently they are trading just under $50. So if we're looking to buy Intel, buying right now looks like it would be a steal. Thanks for watching our video on our in-depth analysis into Intel Corp. If you liked it, make sure to like and subscribe so you don't miss any future analysis videos. Also, make sure to comment any future video ideas you may have for us. Also, if you're interested in watching more, you can check out our most recent video where we went into how to snowball your dividend investments in order to increase your passive income. Finally, if you are starting to get into investing, make sure to check out our website, trackyourdividends.com, so that you can easily keep track of your dividend portfolio.